What's up YouTube? Dougie Chong here. Welcome to today's video where I'll be reviewing Berkshire Hathaway stock. I really hate how this company is named. I always want to say Berkshire, but I'm pretty sure it's pronounced Berkshire. I'm super excited about this stock because its founder is a very well-known and respected investor that I personally admire. It was founded by the Oracle of Omaha, the great Warren Buffett. Warren Buffett founded the company in 1970 in Omaha, Nebraska, and still runs the company today despite being nearly 90 years old. I could make a whole video on why I look up to Warren Buffett as a role model, but I encourage you as an investor to at least look up the life story of Warren Buffett and see what he did and how he accomplished what he has. I think that one of the things that I relate with him on is that despite being one of the wealthiest people in America, he does not spend a lot. He lives in a very modest house in Omaha, Nebraska. And while I am not one of the wealthiest people in America, when it comes to creating wealth, it is very important to not spend above your means. Because even if you make millions and millions of dollars, you can still go broke if you spend too much. This happens to a lot of famous athletes and celebrities because they do not learn good money managing techniques. Warren Buffett still enjoys the occasional meal from McDonald's, which cannot run more than $20 despite having a net worth in the billions. Other parts of Warren Buffett's story are also pretty inspiring, such as the fact that his family did not have a lot of money growing up, and one of his first jobs was selling, chewing gum and magazines door to door. He truly is a rags to riches story, and in order to understand the company Berkshire Hathaway, you have to understand Warren Buffett. It's true that he won't be able to run the company forever, but a lot of what he has done has already made a lasting and permanent impression on the company's culture. Alright, so now let's look at the business model of Berkshire Hathaway. They basically buy parts or entire companies all together and either make money from the dividends of that company or they sell it later on at a higher price. Typically, they hold companies for a fairly long period of time. Some fairly well-known companies owned by BRK are Geico, Duracell, Dairy Queen, and Fruit of the Loom. One of the main pillars of success to Buffett's company is that he preaches value investing. He typically goes for safer companies that he fully understands the business model of and that are just undervalued. An example of this is when he bought the insurance company Geico. Insurance companies are basically money printers because people pay premiums to insure things when things don't typically even happen. They pay money for a service they never receive. Of course, some people do cash in on their insurance, but if the insurance company ran their numbers correctly, they should come out on top. The most recent acquisition of BRK was Dominion Natural Gas for about $10 billion. And while I do not know a lot about this sector, I do know that people will be using natural gas for the foreseeable future. Therefore, I expect this investment to provide nice, stable returns in the future. In recent years, Warren Buffett has admitted to missing out on some value from some fast-growing technology companies such as Amazon. BRK does own a considerable amount of both Amazon and Apple stocks, but this was not done under the advice of Warren Buffett. It was done under his right-hand man, Charlie Munger. I think Buffett can be forgiven for not seeing the value of these revolutionary tech companies because he is nearly 90 years old. Amazon did not exist way back when he was in his 20s. These companies aggressively price in future growth, which is why an investor such as Warren Buffett would shy away from these stocks because they're not typically your value stocks. Those are some of the highlights of the company, but even Buffett is not perfect. BRK recently bought some US airlines, I think within the last 1 or 2 years. And due to everything that is happening in the world right now, those airline stocks plummeted and Warren Buffett actually took a rare loss. sold all of his holdings in all US airlines, from Delta to American Airlines. That shows how little faith Buffett has that the airline industry will ever recover in the US. Remember, this is because Warren Buffett typically holds stocks for a long period of time, 5 or 10-year horizons. So the fact that he doesn't think that the stocks will recover in that time frame just shows how badly he thinks the US airline industry really is. Airline stocks used to be a fairly safe bet. People were traveling all over the world at record numbers, but that just goes to show that nothing in investing is guaranteed and anything can happen. Alright, now let's look at some of the numbers. For this video, we'll be focusing on BRK B class shares. BRK A class shares also exist, but those are priced close to $300,000. One of my goals is to actually buy a full share of BRK A stock. I know I could buy a partial share, but owning one of the most expensive stocks available would be a pretty cool feeling in my opinion. But BRK B class shares currently trade at $190.76. Its 52-week low is around $160 and its 52-week high is around $230. The 6-month price chart shows that the company took a decent hit around March this year for obvious reasons. Zooming out to the 5-year price chart, you see slow, steady growth that is kinda stagnating in recent years. This stagnation of growth is not something you typically want to see, but it can also signal that the company is ready to break out of a slump. Its market cap is $463 billion, which is absolutely massive, and its PE ratio looked really way too small at 0.032. So I did a little bit more digging, and the true PE ratio is around 47 for BRK A class shares. The 0.032 is just the division by the actual amount. So that PE ratio of 47 is actually a little bit on the high side. Alright, now let's take a look at the balance sheet, which was very, very impressive. They have about $817 billion in assets and only $389 billion in liabilities. Having more than twice the assets as liabilities is always a good thing. The company also has a record cash pile of $137 billion just ready to scoop up some companies at a great price. And trust me, there will be some companies on sale due to the whole Rona situation. So is Berkshire Hathaway stock a buy in my opinion? Again, this is just my opinion. I am not a licensed financial advisor. This is not legal financial advice. So I started watching the stock when it was around $178 and it kind of quickly shot up to $190. So right now, I do not think it's a buy in my opinion. However, I am closely watching this stock, and if it drops lower, maybe that 160 region, then I'll definitely start looking at buying some shares. Also, I haven't given an update on my simulated stock trading portfolio recently. I haven't made too many trades. The most recent trade I made was for AMD stock. I bought about 20 shares at $51.60. And the total portfolio sits at around $104,000, which is about $4,000 higher than what it started late last year. That's it for this video, guys. Hope you learned a lot about Berkshire Hathaway stock. Remember to leave a like if this video helped you at all, and don't forget to subscribe if you have not already. Enjoy the rest of your weekend and see you in the next video.